Hey everybody, happy to be doing this video again. We've got three particular topics we want to cover today. First and foremost, we have a webinar that we're going to be doing August 29th. I think that's the last Thursday of August at 11:30, and it's going to be on Medicare. It's going to be a full hour on the ins and outs of Medicare, and we think it's very important whether you're in Medicare, thinking about signing up for Medicare, or have to sign up for Medicare soon to participate in the webinar. There's something for everyone to be learned with that webinar. I want to talk a little bit about the stock market so far this year to date. We're over halfway through with this year. Unless you've been under a rock, you know that the market has had a pretty good year. The S&P 500 is up just over 20% so far this year. Again, that's America's 500 largest companies. But when you look at the All Country World Index, which is basically all the indexes combined, all stocks across the globe, they're up 16.2%, which is a tremendous year, very abnormal year, and really is coming on the back of what was a challenging year last year, where the U.S. stocks, the S&P 500, dropped almost 20% from September to December, and we've had quite the rebound. Now, the reason the All Country World Index is trailing the U.S., the S&P 500, is because the international stocks have not had as good of a year this year as the S&P 500 has. So if you look at the S&P 500 up 20% and then compare that to international developed stocks, which are up 11.6%, and then emerging market stocks, which are up 9.2%, you might come to the conclusion that, well, diversification doesn't work any longer. And we would disagree with that. Diversification is still important, but you can certainly tweak it. As we did last September, we reduced international exposure and emerging market exposure by half last September in favor of U.S. equities. We did that because of the challenges that we feel that the international markets face. In particular, Brexit, which with the new Prime Minister stepping in, a pro-Brexit Prime Minister, certainly they can expect some volatility in their economy, in their markets, as they, it's been well over 5 years now, try and figure out how to separate from the euro. I don't have answers on that, and certainly I don't think they have answers on that, but they're going to have to fight and figure that out. In the meantime, we did reduce international exposure by half in our portfolios. Now, finally, we want to talk about another data breach. We always talk about these because they're so important. Capital One earlier this week released information that 100 million customers have had their records breached. 140,000 Social Security numbers, 80,000 bank accounts, all Capital One customers. So if you've ever had an account at Capital One or you are a current client or customer of Capital One, your information might be out there. Now, Capital One has said they are going to inform the customers that had their information breached on their own. Now, what can you do in the meantime? I think very important, you can go back and look at our webinar on cybersecurity that we did in late June. It's recorded, it's on our website, go check that out. Michael will include a link on this email on how to find that. But one particular topic in there was freezing your credit. I think that's the most important thing you can do here. So TransUnion, Equifax, Experian, they're the three big credit unions. You can go and freeze your credit report at those credit unions, which is probably a phone call, or maybe you can do it online, and basically set up a password or a PIN. So if somebody's trying to open credit, or yourself trying to open credit in your name, most likely a credit card, if it's an identity theft issue, if that occurs, they have to know that PIN in order for the company to access your credit report. And so it's a great way to protect yourself. Yes, it's a bit annoying, we get that, but it's a great way to protect yourself. And certainly you can do something while you sit around and wait to find out if you're one of the members of Capital One that had their information breached. Finally, we've got another video being released next week. We're going to talk about recessions. We're going to talk about, is it good or bad to try and time a recession? As you know, the U.S. economy has been in a great place for quite some time. A recession is sure to come. That's just the nature of the beast as the economic cycles go. We're not saying it's happening tomorrow, but we are saying a recession can come. Should you try and time that, or should you not? That's the question. We'll talk about that in that video. Have a great week.